For institutional investors, how are they mapping the current environment and what are the pockets where value has surfaced up again? To discuss all that and much more, let's connect with Shiv Puri, founder and managing director with TVP Capital Advisors. Fantastic to have you back. Thank you for joining us.
Thank you.
Now, if I ask you the obvious question on demonetization, the obvious answer would be short-term bad, medium-term great and long-term great. But let's go beyond that. I think markets have pretty much adjusted to the fact that slowdown in the Indian economy is going to be here. The point of debate is that what could be the extent of slowdown. Some brokerages are saying that it's going to be large, some brokerages are saying it's not, it's going to be very small. What is your assessment?
Yeah, I think at this point it's very hard to figure out because an experiment like this has never been done anywhere else in the world. So there's no precedent for something like this to happen. If I look at it this month, a good chunk of the decline in the Indian markets is because what's happening in emerging markets. So, India is down about 7.5% in US dollars, but MSCI EM is also down about 5.5%, 6% in US dollars. So a lot of that has to do with the global situation as well. As far as demonetization is concerned, like you said, obviously there is a bit of a short-term impact. I think what would be helpful to look at over the next few months is less to do with the number of notes that come back in the system and things like that, which we get now data from the RBI on a daily basis, but more to do what is the government doing in terms of any backup plans. If things were to get out of control, how do they plan to address it? So that I think is the area of focus that should be there over the next few weeks. Whether they announce tax cuts or fiscal stimulus or things like that, those are things that come into the real economy with quite a considerable lag. But the brake on the economy is very sharp this current quarter. So I'm hoping that some of those things to address some of those concerns are coming from them.
The big concern is also that, there is a GST impasse as well in the parliament because they want the Prime Minister to show up and now the focus is demonetization. Up until now you thought that demonetization along with GST is going to aid the recovery growth because GST is going to peg it forward while demonetization would peg it backwards, but there will be some sort of equilibrium, so to speak, but that doesn't seem to be happening any longer.
Yeah, so I think from a medium-term perspective, the handover of the economy into the GST regime now becomes even more vitally important because the hiccup that could have happened, which I think there will be a little bit of an impact when you move into that, could have been absorbed had the economy been picking up.
Yeah.
But with this sort of a shock, now it becomes very vitally important that there's not much more of a disruption to business. But I think the next couple of quarters is going to be very interesting of how things play out here.
So as an equity market investor, what are you likely to do right now?
Well, so as you know, in the equity markets, a lot of it, you have to decide what gets priced into the market. I think that's the number one thing. To predict macro events 6, 9, 12 months out is very difficult. One has to look at the probability of what is being priced in. And if you look at some of the areas within the markets, I think a lot of that is starting to get priced in very quickly. The second thing is, I think there is a very significant asymmetric positive payoff for a 2 to 3 year time horizon at this point. Because at the end of the day, whatever actions have been taken are not fundamentally negative. The macro conditions are not fundamentally negative. So I think that's sort of how we look at it.
You have a large exposure to HFCs. HFCs is where the concern is. Some concerns are genuine, some concerns are real. Have you looked at reconsidering your exposure to HFCs?
I think we look at HFCs and are as excited about it as we were a few months ago.
Why is that?
And especially if you look at the rural housing finance companies. If you look at the ticket sizes of any of these purchases, they're about 10 to 12 lakh in ticket size, and the average loan is about 7 or 8 or 9 lakhs. There is not a significant cash component in any of these purchases. These are all end user driven. So I think the impact on demonetization on this part of the economy and business will not be that significant, the business impact. Now, short term, there are execution issues. Laborers can't get paid, construction is not happening. So all of those things will work its way through the system over the next couple of months. But from a fundamental perspective, I think this is a very good sort of growth opportunity still.
So you haven't sold any of HFC stocks?
I think these are very interesting. I think the other thing that's happening is some of the HFCs had been very aggressive in growing their loan book, in LAP and in sort of taking up the ticket size to grow. And I think they're getting a little bit of a soup. And as a result, the competitive intensity, which was one of the things that we've been monitoring over the last few months, as you've seen the number of housing finance companies that come up, I think many of them will be forced now to scale back. And
so
that's good
what does
for
one do? Stick to just 2 or 3 names, because HDFC, maybe Repro to some extent, maybe Chola, everyone else has a very strong lab book.
One has to differentiate between LAP as well, Nikunj. So the issue is, if you have LAP on a 20-25 lakh property with a 2x cover, it's very different than doing LAPs on 1, 2, 3, 4 crores. So the ticket size makes a huge difference in how the NPA plays out. There's a very direct correlation between that. But in the lending business, there are always only a handful of really good quality lenders.
So what else is the screen pricing in right now? Do you think this is just the knee-jerk reaction and the devils are only going to play out in the next quarter or two? Or do you think much of it is already in the price?
In housing finance or the market in general?
No, the market in general.
So I think there are certain pockets that it's starting to get priced in. Maybe in others, a little less so. But if you look at specifically in financial services, I think this is a big positive what's happened for them. And the near term, might look a little cloudy. But the fact that you've got an unorganized segment of the economy coming into the formal segment, this is a huge boon for financial services companies. Now, for those who lent poorly and for those who have asset quality issues, this makes the problem worse. But for those that are not in that position, I think this is a good opportunity for them.
Has the momentum got broken in consumer names?
Absolutely. The momentum's gotten broken in the consumer names. But the other interesting thing is, perhaps maybe in the first time in the last 3 or 4 years, some of these companies might actually offer an interesting entry valuation.
Give me an example.
Well, so, again, without specific names, if you look at the consumer durable companies, if you look at some of the FMCG companies, even if you look at some of the home improvement companies, a lot of the valuations that these had were in the 35-40 range, PE multiples, but the earnings growth wasn't coming through for the last year or so. So people were sort of looking at it and saying these are quote unquote safe sort of stocks to own. Now that you've seen this significant correction happen, I think some of these companies become pretty interesting.
So from a market standpoint, what's the biggest worry right now?
Well, I think the biggest concern is that you're going to see for the next probably 2 quarters, foreign investors sort of reconsidering how they want to allocate capital to India, because the issue is that this is something they are not familiar with. They haven't seen an experiment of this nature happen. Everybody, like you said initially, everybody thinks it's a good thing in the long term. It's a positive. But how it actually gets there is something that's going to be a little bit of a wait and watch mode.
So my question to you is that, let's look at 2017, November 2017. We could be staring at a very different economy. Consumers would have slowed down significantly, government spending would have increased, yields would have come closer to 6%, and we could have seen a huge upsurge in government spending. So if I build these broader scenarios, what is the best way to participate in this market?
So I think the areas that one should look at is in India is first financial services. I mean, if government spends or if there's retail spending, that's an area that has to continue to do well and continue to grow.
So buy HFCs, buy private banks.
Exactly. I think those are the 2 areas that nothing changes for them in this demonetization move.
You will not buy PSU banks?
So we've never looked at them very seriously because of the structural reasons that we've talked about in this show. And I think that's something that hasn't changed with or without demonetization. They might be interesting from a trade, but from a fundamental standpoint, I think they still have their structural issues. I think you're going to get a great chance probably over the next 6 months to look at some good consumer durable franchises, which were pretty expensive for the better part of the last 4 or 5 years. When you look at the NBFCs that we've talked about, those that have underwritten smartly over the last few years, whether it's in housing finance, whether it's in consumer finance, are going to benefit immensely over the next year. On the infrastructure side, one has to look at select few, I think, capital good companies that are, that might be interesting, business consumables, that we've talked about. but looking at sort of infrastructure developers and things like that, I think is still not very
So you will
interesting.
not buy road companies, you will not buy companies which are in the APC business.
So again, with or without demonetization, nothing fundamentally changes about the quality of their business. Their
So
return on
your
capital.
portfolio pretty much is aligned around consumers and brands. I mean, that's your portfolio. That's been your portfolio for the longest time I can remember. So because of demonetization, even though we think it's a big reset, the parallel economy becomes a white economy, unorganized become organized. You're not looking at changing your portfolio orientation.
These are all positives for that.
Okay.
You've actually got a part of the economy that these companies were not capturing, that they are now capturing. And in fact, I think that's a benefit for most companies in the index because they are generally in the organized space. So the migration from unorganized to organized helps most of the companies in the index.
How concerned are you about the currency weakness? Because we've fallen more than some of the other emerging market currencies.
So I think if you look at it, the currency weaknesses, worry you more when the macro conditions are bad. So if inflation was going up, if the fiscal deficit was going up, those are conditions that you get pretty worried about the currency. But here it just seems to be more of a short-term flow out of the market. We've seen the 10-year bond yields that have come down quite dramatically. So there's the money that's leaving the bond market as well. EM currencies across the board have been weak based on the Fed's near certainty to raise rates in December. So I think it's a combination of that, which for me is less on the worry scale rather than if something was happening on the Indian macro situation.
Is demonetization the only worry right now, or do we have something to be worried about the new president-elect in the US as well?
So that's a whole different conversation on how that can play out. But I think one of the things from the India standpoint is that you will probably see a lot of dollars move back to the United States. One of the things that the president has said in his talks is that he wants to get the U.S. money that's lying overseas, back into the U.S. after a one-time tax. That's a few $1 trillion that could potentially move back. So there could be that sort of movements that happen. From an India perspective, I don't see that to be a very significant.
No worry for IT, etc.
General,
I don't think so.
Generally, if I talk to global investors, they are of the view that US markets are slowing down. Let's look at emerging markets. They offer you better growth. The feeling with US investors now is that the back home market, which is the US market, could do well. US economy, for the first time, you're feeling confident that because of spending, the US economy will start expanding. The GDP actually could double or triple in 2 or 3 years. So if the US investor is feeling positive about their own economy, do you think they would ignore markets like India? Because that arbitrage which they wanted, that arbitrage is not going to be there.
So I think you have US investors that have an allocation to the US and an allocation overseas.
That was the first allocation shift because you were not getting good growth in developed markets. After a gap of nearly 7 or 8 years, the optimism that US growth will come back is there now. So if I'm an investor, why go for other emerging markets? Why bet on the currency volatility when I'm feeling confident about my home market?
So, I think when I at least speak to a lot of the investors over there, the one interesting takeaway is that the allocation to India and other emerging markets is pretty much in an all-time low. There is
India is at all-time low.
For them,
Okay.
for many of them.
Okay.
As a proportion of the MSCI, they may have a slight overweight.
Okay.
But if you look across the portfolios of institutional investors, pension funds, India emerging markets compared to their historic allocations is very low. So it's not like they've got a lot of capital that they want to move back to the
So
US.
what's money chasing across the globe? I mean, is it only Russia and the US dollar, or some other trade which is really hot right now?
No, I think right now most of the money is going back to the US dollar. You can see that in the strength of the US dollar versus every commodity and
Asset
foreign
class,
and
yeah.
asset class. The S&P I think is nearly at its all-time high. So I think a lot of that is short-term moving back over there.
So do you think for India to do well, US has to do poorly?
I don't think that's true at all. In fact, I think if the US does very poorly, that's bad for the whole world.
I'm slightly lost this time to draw these correlations. The historical correlation was that India will get decoupled. Doesn't matter what US does. In 2008, we realized, look, there's nothing called decoupling.
Correct.
That's just a mental word. Everything goes in a synchronized manner. So if US goes down, we will come down. If US goes up, we will also go up. Right now, US markets are going up. They're at an all-time high, and we are
But we
suffering.
are decoupled.
So I don't know which is the correlation. Is there a correlation at all?
Well, in a 2-3 month period, there's no correlation with anything. But I think if you look at it over a multi-year period, you want the global economy to be doing okay. We're too small in the global context to be shining.
Okay, I'll ask you a question which I'm sure your fund managers would be asking you, or your investors would be asking you. So, Rohit, let's actually look at the 3-year graph for the Nifty, actually 2-year graph for the Nifty, and let's look at what Nifty has done. And I'm not even putting the dollar, equation here. So let's look at the 2-year chart for the Nifty, and then you'll be surprised at how flat the performance has been. That's the India story. In last 2 years, the money invested in India, and I'm not calculating the currency here, has not given me any returns. For a country which promises the best macro, commodity, there you go, the graph is there. Shiv, oh
down
my
6%.
God.
So
how are you answering this question?
why only going back 2 years? We can even go back 15 years. And if you look at the market over 15 years, in US dollar returns has been high single digits.
Which is nothing.
Which is not great. So what does that mean? That either means that the Indian equity markets haven't been that attractive, or maybe the equity index is also not that constructed that attractively.
No, it's just for benchmarking purposes.
And so for benchmarking purposes, I think if you look at, whether you look at the domestic mutual funds, whether you look at the foreign investors, I mean, if you look at the last 2-year or 5-year, 10-year performance from the top mutual fund managers out here, they've all done, everyone's significantly beaten
Buffett
the benchmark.
says that passive investing is again. Buffett is of the view that hedge funds will underperform. Buffett is of the view that, look, put your money in the index, don't give it to active fund managers.
True.
I'm saying what Buffett is saying.
It does not mean Nifty, maybe.
And Buffett also said that for niche markets, you should actually look at people who can outperform.
Right.
He was talking about the US market.
So let's talk about your outperformance. How are you investing in this market? You've told me the themes, but where are you betting on winners? Now tell me the secret sauce. Now that you're defending that money should be given to the active fund managers.
So now that's a different debate that we're going to get into, and I don't have a strong view on that either way. But I don't think this demonetization structurally changes how one should look at investing.
Okay.
One should still look at buying really high quality businesses in India, look at the management teams, look at the competitive intensity of the industry, and basically be patient for attractive prices. And I think this gives us that.
What would you not touch right now, sectorally?
Just the opposite of what I've said. So there are a lot of companies in India which, whether the cyclical story is up or down, have very poor return on capital, have a very difficult sort of businesses from a competitive landscape, and they may have 6 months or a year or 2 years of sharp earnings growth, and sometimes the stocks move to mirror that. But those are the companies that you basically want to stay away from. So you've got sectors like high capital intensive sectors, you've got the infrastructure sectors, you've got sort of real estate and construction. These are very difficult sort of sectors over the long term to capitalize on.
So let me get closing comments from you. Now, we've struggled with inflation in India. We've struggled with high cost of capital in India. The real impact of demonetization would be that cost of capital comes down. We'll align with global markets. That inefficiency because of parallel economy that gets down. So the regime could be low inflation, low interest rates. Unlike the previous regime, which was high interest rates and high inflation. That's a big reset, and that big reset is going to change the way how you value companies. It's going to change the way how companies will do business. It's going to change the way how consumer companies will lack pricing power. So what are your thoughts there?
So Buffett says that the single most important thing for stock prices are interest rates. Interest rates act on stock prices like gravity.
Yeah.
And so with interest rates going down, that is obviously positive for the equity markets over the long term. And
US interest rates are going higher.
But there's also growth that's picking up over there. And I think in an interview just day before yesterday, Buffett said that if the 10-year interest rates goes up to even 3.5% to 4%, he is still optimistic on US stocks.
By the way, Berkshire Hathaway is underperforming S&P, the Berkshire Hathaway stock.
Talk about value investing.
For what period?
5 years. We've not looked at more than that. I mean, we tend to look at data the way we like.
That's typical of an Indian investor. Okay, Shiv, good chatting with you. Thank you so much.
Thank you.
Find us on Facebook at facebook.com/ETNow and don't forget to click the like button. You can also follow us on Twitter at ETNowLive. To stay updated with all our programming, hit the subscribe button on our YouTube channel by logging on to youtube.com/user/ETNow.